All right. Hello. Good morning, good evening, and good night. I hope you guys are doing absolutely fantastic as always, because in today's video, what we're going to be doing is we're going to be talking about the Yieldmax ETFs and whether or not we see a pleasant or grim future for them, just based on the Dow Jones Industrial Average and the overall market. What I also want to do in this video is go over with you guys a little bit of a history lesson on what the market did in the past and why I do think it's very similar to our current market time period. We're going to go through that and just kind of get a little bit of an overview of where the overall market is at right now in terms of whether we're in a bullish market, a bear market, a sideways market. I want to kind of give you my perspective on where I think we're currently at. And if that does sound good, I hope you guys do stick around for this video and subscribe. We're up to 2,699 subscribers. I swear we were at 2,600 subscribers less than a week ago. We are absolutely killing it, going to 2,700 very soon, I hope. We're not there yet. We got to get there, so we need your help. So subscribe if you haven't yet done so. What I do want to say is this video is pretty much brought to you by the Entrepreneur Investor. I want to give this guy a little shout out. Look, he's a 1.6K subscriber page. This guy makes some great videos. I actually watched a couple of his videos. I haven't seen this previous one. It's Yieldmax ETFs are crashing. Now what? I guess we're about to find out, because I'm gonna make a video on it. And I want to say thank you, because I do like this video topic and I wanted to make something similar. I haven't yet watched your video, sir, Mr. Entrepreneur Investor, but what I want to do is kind of share my thoughts on where I think the Yieldmax funds are going and the overall market. So what I have here is I have the Dow Jones Industrial Average up, and as you can see, it just actually went lower than this $34,000 marker right here, which was a pretty key support level. Now, I'm no day trader, but I do know that when you break a previous low, or as they call it, a support being the bottom, you could potentially enter into a bearish trend. Now, what I do look for is the MACD, and the MACD was relatively flat. As you can see, in periods where the MACD is above this 50% line, we generally see a bullish trend. As we see here, all the way going up to this point here, we see the MACD kind of slow down and the market slow down in general. And when it's flat, we see the market kind of trend sideways, but now the MACD is going below the halfway point, which could indicate that we're in a bear market. And the thing is, we actually just crossed through this $34,000 point marker right here. As you can see, we're now below that. So it could indicate that we have some room to run to the downside. Now, there is a bit of support at this $33,750 level relatively, and there's a lot of supports in between, but I just want to kind of bring that to your attention if you are looking to invest and maybe think that the market might go a bit down in the next couple days or so. So I just wanted to give you guys that little heads up, not saying that it will, but I'm just kind of showing you what I think. Now, another thing to look out for is our current time period. And what I want to say is I want to bring you guys back to something that happened a long time ago, 1965 to 1982. So the Great Inflation was the defining macroeconomic period of the second half of the 20th century. Lasting from 1965 to 1982, it led economists to rethink the policies of the Fed and other central banks. Now, 1965 to 1982, this time period right here was a time period with pretty high inflation, something that we pretty much have in our day-to-day market with, the government printing so much QE and everything like that. And what I want to show you guys is that in this time period from 1965 to 1982, the stock market was relatively flat. Now, this is something to keep in mind if you are an investor, because we recently went through a time period where we did have double-digit interest rates. Do we have double-digit interest rates? I'm pretty sure we did at one point. I know inflation is currently slowing down a little bit, but it's still something that is definitely on people's minds and something that people are feeling today. With that being said, I just want to take you back through history. You can see in certain time periods, you see bull markets where in 1950 to 1966, there was a bull market. And then down here in 1982 to 1998, there was also another bull market. But in this time period here, similar to our time period, we've seen a flat market for 14 years. Now, when you look at the Dow Jones over the last couple of years, just going to the 5-year marker, this looks relatively similar to this period right here. Sure, there's obviously the ups and downs within this period, as we do see with our own stock market. But the thing is, we don't see that overall trend like we do. There's a little bit of a trend if you guys see right here. but for the most part, it's been a pretty flat market, not really testing this high and not really testing many of the lows, just kind of going in between. So one thing, how would this affect Yieldmax? Now, Yieldmax, they're cover call strategy ETFs, TSLY, a synthetic cover call strategy ETF. And I understand that sometimes people say that cover call strategy ETFs, such as CLIP being another example, which pays a 60% dividend, close to there, they tend to do okay in sideways to downwards markets. The best thing for, I think, an ETF like TSLY is for a slight incline in the underlying stock price, which is Tesla. If they could have not this major incline, but a slight incline, potentially, like this period right here, and have that continue, that would be the most ideal case. Because when investing in TSLY can only capture certain parts, 5 to 15% of, I'm pretty sure, the weekly gains, or is it monthly gains, of the underlying stock, which is Tesla. And the thing is, if Tesla makes these massive moves, such as a negative 4% or higher, I know Tesla's had some moves in the past where it was, negative 8% or plus 8%, and TSLY wasn't able to fully capture those moves. That is where we're getting hit and hindered by investing in TSLY sometimes. And so it's very important to be very careful when you invest to pick up TSLY at a great price so you can protect yourself from that risk a little bit. But that is just a little bit on my cue on, where I think kind of like the market's at right now. I do think we might actually be in a sideways trending market. And I do think this is going to be here for some time. I don't think anyone's really looking for a recession. I also don't really think anyone's kind of seeing a massive bull run. I think people are kind of just testing the waters right now. No one's super bullish. No one's super bearish. But it's just kind of something, that I'm thinking about. And I'm thinking long term with this, because TSLY's a position that I have about not a couple thousand. I have about $1,000 worth of TSLY. But what I do want to say is that I'm wondering how it's going to perform in this market. It might perform decently well because we will still see some volatility, but it's not going to be as massive as if it was in, a pretty big bear run or a pretty big bull run. Judging that it might be relatively flat, I'm very curious to see how stocks are going to actually perform going forward, because although the market has been relatively flat, when the market does go to the downside, Tesla, for example, and other stocks generally get hit pretty decently hard. As you can see, this is almost a 30% drop right here, just off this little Dow Jones drop, which happened right about here. So with that being said, this was just a little overtake on where I think TSLY and the other Yieldmax funds might go over the future. I think they might stay relatively the same price, or could potentially depreciate a little bit more than we'd like. And the thing is with TSLY, when the stock price gets lower, the dividends, they also get lower too. If the stock price was to raise up to $20, we might see bigger dividends. It's all dependent upon the net assets within TSLY, because they're going to write the cover calls on the money that they have in that account. And the lower the stock price of TSLY, the lower the dividends will be. So that's another thing to keep in mind in your back pocket as investors. So I hope you guys did enjoy this video, and it gave you a little bit of clarity about just where the market might be headed in the future. I hope you guys did enjoy this video. I hope you guys not only subscribe to the Entrepreneur Investor, but also myself, being the Honorable Investor. As you can see right here, we're up to 2,699 subscribers. So I hope you guys continue to enjoy the videos. I hope you guys subscribe, and I will see you guys in the next one. I hope you guys have a great Saturday, and take care.